No data, no problem. The Fed's still on track for another cut. It's Wednesday, the 15th of October, and this is what you need to know. Fed Chair Powell just paved the way for another interest rate cut at the end of the month. In a speech on Tuesday, he said that the economic outlook is holding steady, but job growth is slowing and may cool further. With the ongoing government shutdown blocking key economic data, the Fed is now turning to private sources. Powell also hinted that the central bank could stop shrinking its balance sheet in the coming months. Markets liked what they heard, as risk sentiment bounced back on Wall Street. But a tit-for-tat escalation in US-China trade tensions are keeping markets on edge. President Trump has threatened to halt cooking oil trade with China after Beijing's refusal to buy US soybeans. He called it an economically hostile act, but ours leader struck a more hopeful tone and said a deal could still be reached. With the tariff truce set to expire early next month, the risk of a full-blown trade war is rising. That's hitting oil, our chart of the day. Prices have steadied after hitting a 5-month low on Tuesday. The drop followed EIA data that showed a massive build-up in shipments last month, driven by surging exports. That's showing that supply is now outpacing demand. The report also showed that the global oil market could be oversupplied by nearly 4 million barrels a day by next year. That's almost 20% up from their prior forecast. French bonds just had their best day in nearly 3 months. Optimism is growing that budget concessions are diffusing a growing political crisis. Prime Minister Le Cornu signalled a willingness to scrap pension reforms. That complicates deficit goals, but does help to avoid snap elections. Meanwhile, the Socialist Party said it's ready to back the budget, boosting the government's chances of surviving Thursday's no-confidence vote. And our stock of the day is ASML. The semiconductor giant beat expectations on third-quarter orders, boosted by AI demand. It now sees 2026 sales at least matching this year's levels. One drag still remains. ASML still expects a sharp drop in sales to China next year. And that's what you need to know this morning.